All right. Today is Wednesday, March 30th, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight. You know, we talk about fun stuff in this channel, like crashes and crises and starvation. You know, the kind of stuff you want to hear about before going to bed. But rest assured, I might start a new channel where we talk about makeup and cooking recipes. But until then, let's dive in and discuss some uplifting subjects in this channel. And here it is, in focus tonight. How about a hunger crisis, the likes that we've never seen since World War II? It's not a big deal, come on. I mean, we gotta lose some weight once in a while. Anyways, everybody's watching the stock market and the mystifying rally. You know, mystifying because maybe it's manipulation. Yep. And it ties into this guy, Jerome Powell, the criminal of the century. And I made a video about 8 months ago calling the Fed's action as the crime of the century. Part of my reasoning was, by propping up the stock and real estate markets, the assets of the wealthy, by printing trillions and trillions of dollars, that tsunami of liquidity, aka the cocaine operation, the Fed also gave birth to inflation. And inflation has been rising, believe it or not, before the war between Russia and Ukraine. And even back then, I said that it is the crime of the century because it's going to cause inflation across the board. And the most dangerous form of inflation is food inflation because it leads to starvation, hunger crises, and revolutions and political uprisings. You know, when people can't find bread, when the prices of bread surge out of whack. But to the Fed, propping up the stock and real estate markets was the top priority. They don't care about hunger crises, the poor, the middle class, uprisings in the Middle East. Nobody cares about that, right? To the Fed, it's all about the stock market. It's all about making the rich richer, the rich sponsors, by the way, and that's all there is. So we call the Fed the criminals of the century. Even before the war, prices of food in this country were surging higher, out of whack, placing the majority of households under stress. Prices of margarine, vegetable fats were up 37% in January of this year. Pasta was up 15% in the beginning of the year. Jams were up 13.6%. Yogurt up 12.4%. Lamb, goat, that was up 12.3% in the beginning of the year. And it goes on and on. And it got worse, by the way, because we have this thing we call the war between two commodities giants in the global arena, Russia and Ukraine. And oh, by the way, on top of that, the misguided policy from your beloved Biden administration of sanctioning Russia across the board, regardless of the impacts in this country when it comes to inflation. And now President Biden admits that yes, we're going to have a hunger problem and food shortages in this country and across the globe.
With regard to food shortage, yes, we did talk about food shortages. And it's going to be real. The price of these sanctions is not just imposed upon Russia. It's imposed upon an awful lot of countries as well, including European countries and our country as well. And because both Russia and Ukraine have been the breadbasket of Europe in terms of wheat, for example, just to give you one example. But we had a long discussion in the G7 with both the United States, which has a significant, the third largest producer of wheat in the world, as well as Canada, which is also a major producer. And we both talked about how we could increase and disseminate more rapidly food shortages. And in addition to that, we talked about urging all the European countries and everyone else to end trade restrictions on sending limitations on sending food abroad. And so we are in the process of working out with our European friends what it would take to help alleviate the concerns relative to food shortages. We also talked about a significant major U.S. investment, among others, in terms of providing for the need for humanitarian assistance, including food, as we move forward.
And I don't know if you understood anything of what he said, because he said, yeah, there's going to be hunger and food shortages, and we're going to talk about it. We're going to talk about something else. And what is my nap time again? Come on, man. Gotta go back to sleep. And by the way, how funny or tragic it is that these senile leaders are making decisions on our behalf. You look at Biden or Janet Yellen, Jerome Powell, even the Senate and Congress, McConnell, all of these senile leaders, Pelosi in the late 70s, 80s, making decisions on our behalf. They're not going to even live to see the ramifications of their decisions. But somehow I feel that these senile leaders, they want to go out with a bang. Like they know they're going to die at some point, perhaps really soon, and they want to go and leave this world with a bang, like wars, nuclears, destruction. What motivates somebody in their 80s to be a politician, by the way? When I get to 80, all what I want to do is sit on a farm with a glass of moonshine in my hand, watch the sun, and jerk off. And it's not a stretch, by the way. I think the sun's still going to be here when I'm 80, and my equipment's still going to work, change the oil once in a while. But the stretch could be the farmland thingy because, guys like Bill Gates are scooping farmland across the country. And by that time, we might not even have farmland left at all. Anyways, what the Biden administration might have known or not known, who knows, when they initiated the sanctions, is the fact that Russia, Ukraine, these two countries alone, produce almost 25% of the entire global grains trade. So you take these two countries out of the picture and we're gonna have a problem because last time I checked, you cannot print 3D grains. We can't eat 3D wheat. We cannot consume corn as an NFT. Maybe someday in the metaverse, but until then. Here, in reality land, you take the two top producers of grains, you're gonna have a lot of problems. And to begin with, the world's grain stock has been shrinking for years before the crisis even began. On top of that, energy prices have been rising out of whack, so the cost of transportation of these grains has been moving higher and higher and higher, contributing to the increase in food prices. Globally, by the way, not just in this country. And now you sprinkle a little war that's going to exacerbate the shortages that we've already been suffering from, and you add sanctions on top of that. Well, one of the top producers of fertilizers across the world is Russia, the most sanctioned country on the planet right now. So it is no wonder why we're seeing fertilizer prices surging out of whack in this country. For example, the U.S. Tampa Ammonia Index reached all-time highs. The most expensive fertilizer prices in history. No big deal, right? And all in all, North American fertilizer prices reached all-time highs. Yeah, to the moon, baby. When you have this insane increase in fertilizer prices because of the scarcity, what do you think will happen to the farmland? What do you think will happen to production across the globe? Why are we seeing this, by the way? I already explained it to you. The sanctions, the war, the stupidity, because some of the top producers of fertilizers, for example, potash, happens to be Russia and Belarus, two countries that are sanctioned right now. Where are we going to substitute almost 17 million metric tons of potash? Canada, they can't substitute that. Their entire production is 14 million metric tons. China, not going to happen. How are we going to substitute this shortage? And therefore, you're seeing fertilizer prices surging out of whack. And on top of that, by the way, when we talk about the bread baskets of the world, beside Russia and Ukraine, another name comes to mind is Brazil. Brazil produces a lot of food. The problem is, it also imports a lot of fertilizers from Russia. And if we have sanctions against fertilizers from that country, and exports are being banned because the Russians also banning the exports of fertilizers, it's an economic war right now. What do you think will happen to the output of crops from Brazil? Almost a third of the fertilizer supplies that Brazil consumes come from countries with a lot of problems right now, like Russia, Ukraine, Belarus. And now we're hearing coffee farmers from Brazil and other countries, Costa Rica, for example, saying that they're facing a mega emergency because fertilizer costs are soaring. So you're not going to have grains, you're not going to have coffee, you're not going to have meats. Let's end the world, baby, so long as we're sticking it to Putin, right? Meanwhile, the Russian ruble is recovering and the war's still going on. The sanctions did not do shit at all. What the sanctions will do instead is create more conflicts in other parts of the world. Why? Because some of these countries like Egypt, Indonesia, Bangladesh, Pakistan happen to be the top importers of wheat and grains from both Russia and Ukraine. And I don't know if you remember, last time around, food prices surged to this magnitude. We saw massive shortages and inflation. That was back during the Arab Spring of 2011, and it appears that we're going to have the Arab Spring 2.0.
11,000 tons of wheat arrived in Lebanon this week, but this will be the last shipment from Ukraine. The world's key wheat producers, Russia and Ukraine, are at war. Lebanon, like other countries in the Middle East and North Africa, can no longer rely on them for most of their imports. They're now trying to make up for an expected shortage.
We've reached out to a number of countries, including the US, India, Canada, and some European countries, which produce the soft wheat we need for our bread.
But the problem is not just finding alternative sources. Diversifying supplies could mean transportation delays or an increase in shipping costs. Wheat prices have already hit a 14-year high. Egypt, for example, is one of the largest importers of wheat in the world, and 80% of its supply is from Ukraine and Russia. It is considering raising the price of bread for the first time in 3 decades. It's no different in Lebanon, where authorities warn the central bank may not be able to subsidize bread if prices continue to rise. The Tunisian government, which is believed to be running out of money, has been rationing flour and reduced bread production. Increase in prices will affect millions of people in the Middle East and North Africa who live in poverty.
The Ukrainian-Russian war will affect import, export and trade because we are all importers of wheat and most of the foodstuffs are from abroad.
Across this region, economies have been hit by inflation and large public debts. Others have been destroyed by war. Syria no longer produces enough wheat to feed its population, so it relies on imports and is now rationing wheat. The World Food Programme says 12 million Syrians are food insecure, while Yemen is on the brink of famine.
Unfortunately, for a lot of these countries that are already starving, and they will starve because there is no bread, the most important thing at the kitchen table. And unfortunately for them, none of these countries, be it the US, Brazil, Canada, India, none of these countries can fully substitute the loss of product from Russia and Ukraine. That's just the way it is, because we have a shortage in this country, by the way. We'll talk about it in a second. But even AGCO's CEO came out with an alarming statement, by the way, saying that the Ukraine war's potential consequences on global food supply is a really big deal. What is he talking about here? Diminished food supply resulting from Russia's invasion of Ukraine has potential consequences beyond empty stomachs. AGCO Chief Executive Eric Hansotia told CNBC's Jim Cramer on Thursday. According to Hansotia, about 13% of the global calories came out of production. Wow. And this is just from 2 countries, Russia and Ukraine. This is really a big deal because when that volume of calories comes out of the food chain, it triggers other things, not only hunger, but unrest. The last time we had this kind of disruption was one of the major triggers of the Arab Spring, he said, referring to the pro-democracy protests that took place in the Middle East and North Africa in the early 2010s. Even the UN food chief is now warning of devastation without the supply of Ukrainian wheat. The UN food chief warned on Tuesday that the war in Ukraine was threatening to devastate the world's food program's effort to feed some 125 million people globally because Ukraine had gone from the breadbasket of the world to bread lines. It is not just decimating dynamically Ukraine and the region, but it will have global context impact beyond anything we've seen since World War II. Paisley warned if the conflict in Ukraine was not ended, the world will pay a mighty price. The last thing we want to be doing as the World Food Program is taking food from hungry children to give it to starving children. Russia's UN ambassador, Vasily Nebenzia, rejected accusations that Moscow's action in Ukraine had caused serious turbulence in the global food market, instead blaming Western sanctions on Russia. Paisley added that the crisis was compounded by the lack of fertilizer products coming from Belarus and Russia. If you don't put fertilizer on the crops, your yield will be at least 50% diminished. So we are looking at what could be a catastrophe on top of a catastrophe in the months ahead. And now we're hearing this talk, not just from this guy, that we will have a starvation crisis, the likes that we've never seen since World War II. And the impact will be felt in this country, far farmers are already struggling with fertilizers. They cannot find fertilizers anywhere. A lot of these fertilizers come from Russia and other countries, and any shortage, by the way, these are global markets, folks. If there is a shortage somewhere, everybody's going to feel the pain, even if we have ample sources of supply of fertilizers in this country. The same goes for the energy market, by the way. We have plenty of natural gas, we have plenty of oil, but if there is a shortage anywhere else in the world, the prices of crude move higher, and they're going to sell you the gas at the market price, regardless whether you have an abundance of supply or not in this country. And the same goes for fertilizers to make decisions.
Corn and soybean farmer John Bakehouse is facing a daunting question. In our current agriculture system, he's never had to ask for what he could get or what he could apply. Now the situation has completely shifted.
For the first time, we're talking about it's simply not available. Fertilizer is simply not available. Some chemicals are simply not available. So for the first time, you kind of recognize we're standing on a bit of a three-legged stool with one of the legs starting to weaken.
Bakehouse says his biggest concern is timing. It's too late to consider alternative forms of fertilizer for a corn crop.
If, for instance, we were only able to get half of our fertilizer needs, it would cut into the yields, corn yields substantially, probably at least 30%, perhaps higher, depending on the year.
Cattle and crop farmer Zach Kennedy is expecting to pay double for his nitrogen fertilizer, saying the crisis's timing is adding more stress.
Going ahead, we're going to use more manure. We're trying to use other sources of fertility. And going ahead, we're also maybe going to have to look at some different crop rotations, maybe bringing in a small grain or something like that to stretch our cycles out a little bit and not have to rely on so much commercial fertilizer to get things done.
Amidst all the uncertainty, both Bakehouse and Kennedy hope farmers recognize how dependent they are on inputs from other countries.
We're very dependent on suppliers and buyers. And so what I've been most interested in is growing our own nutrients, using livestock to reduce some of that reliance on the supply chain.
It's hard to figure out right where you need to be and be making some money at it too.
Now some of the farmers are opting for soy rather than planting corn. So forget about corn. The prices of corn will skyrocket due to the shortages of supply. And why are farmers, by the way, resorting to planting soy instead of corn? Well, the answer is fertilizers. Here it is. Which is why the astronomical surge in fertilizer prices, they're up some 27% this year and 130% year over year, is causing farmers to quickly recalibrate the amount of each crop they put in the ground this spring. They'll dedicate about 2 million more acres this year to soy and 2 million fewer acres for corn. 100 of the acres in that switch are happening on Tim Gergerson's farm on the plains just north of Omaha, Nebraska. Gregerson fancies himself as a corn guy first and foremost. At Corn King 333, that is KNG 333, is his Twitter handle. And he always puts more corn in the ground than soy. But when fertilizer prices spiked anew in January, he decided to bring his corn to soy ratio closer to 50-50. And that was even before Russia, the world's biggest fertilizer producer, invaded Ukraine and sent prices skyrocketing even more. Fertilizer is out of control, Gergerson says. He rattles off all the other farm costs that are soaring: fuel, machine parts, herbicides, feed for livestock. Of course, crop prices are jumping too. Corn and soy are both up 22% this year, the result of booming global demand and limited supplies exacerbated by the war. And oh, by the way, they forgot to add the cocaine from the Fed. Wheat, the third biggest U.S. crop, is up even more, 31%. To John Gilbert, that's another farmer, this surge in both costs and potential revenue is simultaneously terrifying and exhilarating. It feels like going down the hill in a truck and picking up speed, but not being sure if you can make that corner at the bottom, he says. Seeing just how much corn was up this winter, Gilbert had planned to carve out 15 additional acres for it on his 123-year-old family farm near Iowa Falls. That is in Iowa, by the way, just in case you didn't know. But like Gergerson, he decided to go with soy instead when he saw the January spike in fertilizer costs. The U.S. government is due to release its 2022 crop estimate on Thursday. Some analysts say it is possible, albeit not likely, that plantings of soy even surpass those of corn. Listen to this. that has only happened twice in record keeping that goes back almost a century. Wow. As much havoc as the fertilizer market is wreaking in the US, it is even worse in other agricultural powerhouses like Brazil, where farmers are fretting they won't be able to find as much as they need this year. Getting fertilizer is going to be more and more of a problem for the world in general, Gregerson says. This in turn stands to further push up food inflation and add to a surge in global hunger that was triggered by the pandemic and drought that have parched farmland in Brazil, Mexico, Canada, Russia, and the US. How come in all of these conversations, they never point out the role of the cocaine, the monetary inflation? That is the root of all evil. It's not drought, it's not the thing, it's not the pandemic. Sure, they contributed, but don't underestimate the role of the cocaine. Printing trillions and trillions of dollars, some of these trillions are causing monetary inflation by chasing commodities. You can say that, yeah, we lost some farmland due to the thing and drought and yada yada yada. But everything is going higher. Metals are going higher. Lumber went higher. Coffee went higher. Meats went higher. Every commodity went higher. Did we lose lumber all of a sudden? Did the pandemic kill all lumber in the planet? All nickel? All gold? Or is it the role of monetary inflation? When you go crazy with the money supply, you get inflation. It's the oldest story in the books. But the Fed will never take the responsibility and admit that they're behind this insanity. They're going to blame it on the pandemic, on drought, on Russia-Ukraine, on aliens, on Mars, on Uranus, but they will never take responsibility. Continuing, at today's price of $930 per short ton, the nitrogen costs pile up quickly. They come to 45 cents per bushel of corn. That alone equates to 6% of the final sale price on corn. For wheat, it is even a bigger chunk, 10% of the sale price. The beauty of soybeans, now listen to this, little farm lesson for you, because the green leafy plants put nitrogen back into the ground rather than taking it out, they only need a fraction of the fertilizer that corn gets. In recent years, farmers on average applied 255 pounds of total fertilizer on corn versus just 65 pounds for soybeans, according to Bloomberg's Green Market citing whatever, who cares. But here's the problem, folks. This fertilizer crisis is causing food shortages and an insane inflation in food prices in this country, and it is getting worse by the day.
The U.S., Canada, and Europe are major wheat producers, but Ukraine and Russia produce about 1/3 of the world's supply. And less food means higher prices on top of already high inflation rates. Groceries are already about 8% more expensive than they were last year.
Okay, it's not 8%, right? That's a joke. It's more like 80%, but they're quoting the CPI from the kitchen, the Bureau of Labor Statistics, the cooked inflation number. You got to be a child to believe that it is 8%.
We used to be able to buy chickens for 80 cents a pound, somewhere in there. Now it's like $1.50 a pound. And so that limits our ability to buy more food and distribute more food to the agencies.
In Tennessee, the governor is pitching a plan to provide relief to shoppers by suspending the sales tax on groceries for 1 month.
Let Tennesseans keep some of that hard-earned money and do so by suspending the grocery tax for a time.
The U.S. is producing less wheat than it used to. About 44 million tons were harvested last season, compared to 50 million 3 years ago.
With all of what's going on, the chaos, the destruction that's going on right now in the globe, we're talking about a hunger crisis, folks. In the 21st century, the likes that we've never seen anything like since World War II. How did we get here as a human race? After all of this advancement, we're going back to the kind of famines that we used to have 100 years ago. And don't blame Russia-Ukraine the war. That's bullshit. It started way before that. It started by the Fed manipulating assets and printing a tsunami of liquidity, trillions and trillions of dollars, producing this insane inflation. Why? For what? The answer is to prop up the stock and real estate markets to make the rich richer. That is the root of all evil, the Federal Reserve. Every crisis can be traced back to the Federal Reserve. And now you have BlackRock, one of the top beneficiaries of the Fed's crimes. Now BlackRock comes out, they have the audacity to come out right now and say that inflation has lessons for a very entitled generation. F*** you, you criminals, you pieces of shit. What entitlement? You have a generation that cannot even enjoy the American dream. Owning a house is a far-fetched fantasy right now for the millennials and the Gen Zers. All on top of that, they're facing food inflation. You know who's entitled? You motherfuckers. who had it so good, and now you want more. You have these senile with one foot in the grave in the late 70s, 80s, but they want to gobble up more. We want more gains in our stocks. We want to scoop up more homes. So all of you geniuses who are cheerleading for the stock market to go higher, well, you got another thing coming to you anyways, because all of this, by the way, is just a process of transferring wealth from the dumb money to the smart money, the Black Rocks of the world. That's all there is. And it only benefits them. Isn't it time for uprooting the entire economic system, the entire filth, the corrupt economic system, and start over again with regular folks in mind, not the Black Rocks and Blackstones of the world? I certainly think so. And with that out of the way, let's move on to cover the stock market activities today. We start the closing of the indices, and here we go. The Dow Industrial Average was down by 65.32 points, or a decline of 0.19%. The Nasdaq, the leader of the decliners today, down 177.36 points, or a decline of 1.21%. The S&P 500 also down 29.15 points, or a decline of 0.63%. Moving on to the sector's performances today, leading the pack at number 1, back on top, capturing the gold medal, energy. Number 2 for the silver, utilities. Number 3 for the bronze, materials. And the laggards of the day led by technology, consumer cyclicals, and financials. And here are the advance to decline ratios. NYSE 30% advancing versus 67% declining. The Nasdaq 28% advancing versus 68% declining. Commodities, green across the board. Rumors about the death of commodities have been greatly exaggerated. WTI crude oil up over 3% today, likewise Brent rebounding and gaining almost 2.25% today alone. Gasoline was up over 3%. Heating oil also rebounding and gaining over 2%. And natural gas is the winner of the day with gains of over 4%. We talk about natural gas. Now we have early warnings from Germany. And watch this closely, by the way, because gas supplies could be interrupted one way or the other, be it this dispute that they should pay in rubles. Putin says it is March 31st, meaning tomorrow, but then came the Russian Jen Psaki and he said, maybe not tomorrow, it's going to take time, but things are going to start to flare up here when it comes to natural gas between Russia and Germany. And of course, the Europeans keep saying that they're going to cut all Russian natural gas supplies, but they said the same thing back in 2014, and they ended up importing more gas from Russia. The difference this time around is there is serious talk and things are moving underway between the US and European countries. We're shipping LNG, liquid natural gas, from US sources all the way to substitute Russian natural gas in European countries. And that is, by the way, lifting natural gas prices here in this country, the United States. So you're seeing your electricity bills moving higher. Why? Because the prices of natural gas in this country are moving higher because we have more demand now. The Europeans want our LNG supplies, but the inventories for now are nowhere to be found. What does that mean? Drill, baby, drill. And as natural gas prices move higher, natural gas producers here in the United States will benefit tremendously. And we made a video about that and we gave you a list of names, so watch that video again. But back to commodities. When it comes to softs, lumber is down, reversing the gains from yesterday, down almost 5.5%, but otherwise green across the board. Cocoa was pretty much in the flat line, but we have sizable gains for coffee, cotton, OJ, sugar, all lining up green with big gains today. When it comes to metals, and pay attention to these relationships, by the way. When we see lumber and cocoa moving higher, coffee, OJ, cotton, sugar go down, and vice versa. Likewise, in metals, yesterday we saw copper moving higher, while the rest of metals were down. Today, it's the opposite. Gold, silver, platinum, palladium, all surging higher, while copper pretty much flat, be it closing in the green. And the most notable action today was palladium. Palladium closing the day with gains of almost 7%. When it comes to meats, flat across the board, be it live or feeder cattle futures or even lean hogs. All flat for the day, no notable movement whatsoever. Grains, rebound day. Soybeans, soybean meal, soybean oil, corn, wheat, rough rice, oats, all closing in the green. Canola was flat, but we have to watch corn now because farmers are planting more soybeans, not corn. So we're going to see a scarcity of corn, which could push prices higher. And now you know why. We have a fertilizer problem and farmers are choosing to go with soybeans, which consumes less fertilizers, versus corn, which happens to be a major consumer of fertilizers. Moving on to options, the big casino. What's going on here? The hottest table by far today was Apple at around 1.5 million contracts traded today. About 58% of those were calls. And at number 2, AMC with around 765,000 contracts traded today. About 70% of those were calls. But for AMC to move higher again, we need volumes of over 1 million, which is not happening. And here it is, Tesla at number 3, the souffle, with around 750,000 contracts traded today. About 59% of those were calls. Moving on to the unusual activities that took place in the options market today, we start with the ticker XBI. This is for the biotech ETF. They're buying calls, expecting more upside for biotech, in this case the 105 calls, with expiration date April 29th. With the expectations, the XBI could move higher by more than 16% by then. They paid around 40 cents a piece to enter this trade, all in all spending around $850,000. What about the trade for the ticker LUV, Southwest Airlines? They're buying calls, the $50 calls for the expiration date May 20th, with the expectations that the name could move higher by more than 10% by then. They paid about 85 cents a piece to enter this trade, all in all spending around $1.5 million. What about the ticker MU Micron? The name reported earnings and it moved higher, and then it lost all of the gains. But somebody's betting that these gains could be restored by buying the 85 calls for the expiration date, April 8th, with the expectations that the name could move higher by more than 7% by then. They paid around 70 cents a piece to enter this trade, all in all spending around $750,000. What about the ticker AAPL Apple? They're buying calls. Now they're buying calls after the biggest rally since 2003. Maybe a sign for a top, but who knows? They're buying the 190 calls for the expiration date, May 6, with the expectations that Apple could gain more than 7% by then. They paid around $1.75 a piece to enter this trade, all in all spending around $1.3 million. What about the ticker FTCH Farfetch? They're buying the 17.5 calls for the expiration date, May 20th, with the expectations that the name could move higher by more than 10% by then. They paid around $1.75 a piece to enter this trade, all in all spending around $1.3 million. Continuing with interesting trades, what about the ticker DDOG Datadog? They're buying the 160 calls for the expiration date May 20th, with the expectations the name could move higher by more than 7% by then. They paid around $10 a piece to enter this trade, all in all spending around $7 million. Lastly, what about the trade for the ticker FANG for Diamondback Energy? They're buying the 155 calls for the expiration date May 20th, with the expectations the name could move higher by more than 11.5% by then. They paid around $5 a piece to enter this trade, all in all spending around $3.5 million. Moving on to the heat map analysis, we're seeing the revival of the year-to-date theme. We're talking about energy, we're talking about defense contractors, LMT, Northrop, all of these names went higher today. The railroads, UNP, CP all moved higher, along with the fertilizer names, gold, copper, aluminum, Alcoa, all moving higher, ADM in defensives also rebounding higher, Berkshire Hathaway in the green. Meanwhile, the recent winners, software, chips, the cyclicals were down. The big caps, though, they're still holding. They went down by a little bit, but no biggie. Is this a reversal right now? No, it's not, but it illustrates the importance of the year-to-date theme. You stick with those names, you buy the dips, and that's how you deal with bear markets. You stick with the bull market within the bear market, which is in fertilizers, in gold, in energy, in gas, in the defense contractors, railroads, etc., etc. But we have news for notable movers today. We start with Apple. Apparently, Apple and Meta provided customer data to criminals who masqueraded as law enforcement officials. So you're in good hands with Apple and Meta, right? And then we have RH Restoration Brands, which went down by over 12% today. And by the way, despite a 3-for-1 stock split. So the stock got an organic split either way, down over 12%. And the earnings call from this company, by the way, is worthy of listening to because it sends alarm bells all over the place that inflation is not going to peak anytime soon. This company says they're going to continue to jack prices higher and higher and higher because there is no end in sight in this inflation. The problem is, this time around, the demand from the consumer is starting to get soft. So we're having sort of a stagflation phenomenon within this stock. Prices are going to continue to go higher because the company is paying spending more, their input prices are moving higher, but now the consumer is not being receptive like it used to be before, and that is a major problem. And then we have Kroger, the ticker KR, and Carl Icahn. Gotta remember this. The movie Wall Street, Greed is Good, right? It was inspired by Carl Icahn, so he's a major piece of shit. But now that he's getting older and he has one foot in the grave, all of a sudden he's doing good things and he's becoming an activist against the slaughter and torture of pigs. He made a big deal against McDonald's, and now he's crusading against Kroger due to the wage gap between the CEO, the management, and the average worker. So good for him, but I guess better late than never, right? Anyways, moving on to the heat map for the ETFs. And again, the winners: Energy, XOP, XLE, OIH, Materials, the XME, Utilities, the XLU, and the losers happen to be the recent winners. We're talking about Chips, SOXX, Technology, XLK, Retail, XRT, Regional Banks, KRE. Look at the TQQQ, by the way, the levered indices, down over 3%. Those who decided to go with the TQQQs rather than the regular Qs, they're happy today, right? And then we have an underperformance by growth, although both value and growth were negative today. The VIX moved slightly higher, so we're seeing the VXX and UVXY also moving higher. Commodities are doing pretty good today, whether we're talking about the USO for oil or UNG for gas, all moving higher. Now, when it comes to international markets, negative picture across the board. Nothing major, but nothing exciting either. Moving on to charts, and we start with SPY, 30 minutes chart for the S&P 500. What do we have here? A down day, but did it change anything at all? The answer is not really. Nothing happened today. You cannot short this chart given the action today at all. The chart lost 461 as support, and it lost 459 as support. That's all there is. You're not going to start thinking about shorting this chart until it starts to break more support lines in a rapid manner. But for now, we saw the stampede. Now comes the awaiting period. Some folks are going to take profits, and there are folks waiting in the sidelines. They want to buy, but perhaps they're thinking, hey, we missed out. Maybe it's a little too late to buy. So the psychology becomes important here. And the question is, when will the sellers show up? The sellers need a catalyst, a flare-up in the Russia-Ukraine front, more threats by the Fed, maybe earnings bombs, something gonna trigger the sellers. Otherwise, the market could stall here and just consolidate for a little while. But there is a frustration factor for the bulls who are waiting to move higher. For example, let's say you hopped in the rally at around 443, 446 and a half. You're not motivated to sell right now, you're sitting on profits. But if the rally stalls and we start to see profit taking by those who entered a little early, for example, 430, 434, if they start to take profits and drop the chart back to 451, 446 and a half, you might see that acceleration of selling as people try to book whatever gains they have left. So the psychology becomes really important now. But this down day that we got today changed nothing, technically speaking. The chart remains bullish. And here's a daily chart for the continuous contract for the SPY, the S&P 500. Anything changed here? Not at all. Maybe the momentum is stalling. If you look at the momentum indicators, they're kind of peaking. When you look at the volume, it is also bottoming. It's going to move higher sooner or later, but no support lines were lost today. The chart's still trading above 4,549.5. No damage at all. We'll talk once we have lines like 4,472 lost to support, and better yet, 4,384.5. And of course, you don't want to miss the drop from this point all the way down to 4,384.5, but we'll spot it right away. If there is a drop, we're going to spot it right away. But for now, nothing happened today that suggests we're going to have a drop. And here's the SPX, the cash index, the daily chart, still above the 200 days moving average, and it went down and it retested 4,590, and it's still holding above that line. No damage done whatsoever. Here's the Qs, 30 minutes chart, similar story. Did anything change today? Of course not. The chart might have lost 369 as support, but that's all there is. No reversal, no damage, nothing happened at all. The bears are not going to start to short until, let's say, 360 is lost as support, but better yet, 352, because this is the most important line right now. Look at how many reactions we got at 352. So we'll call it a pullback until 352 is broken as support, then it becomes a reversal. And here is the daily chart for the continuous contract for the NASDAQ. We identified 15,260 as resistance for now, and the chart stalled right around that number, but it did not lose 15,000 as support. So again, nothing happened today, no damage at all. Yes, the momentum indicators are peaking, but that doesn't tell you anything at all right now. Once the momentum starts to reverse, and we will spot that on the RSI and the MACD, once that happens, then we're talking. And the conversation becomes which support lines will be lost. 15,000, not a big deal. We talk about 14,445, now it gets scary. But absent of that, nothing happened today at all. What about the IWM 30 minutes chart for the Russell 2000? It is a steeper pullback, but is it a reversal yet? The answer is not really, because yes, the chart lost 211. It lost 208 as support, but it did not close the gap. It did not lose 204.5. Once that happens, then we can call it a reversal. But for now, it is just a pullback. The Dixie, the dollar index, what's going on here? It appears that the dollar is stalling. It did not make it above 99. It attempted to do that 3 times and it failed, but it is still holding at 96. So yes, we have negative divergence on the RSI, the MACD indicators, and this is playing out. But we're not going to say that the dollar is over, the run is over in the Dixie until 97 is broken as support. By the way, a drop in the US dollar is good for commodities, good for oil, good for gold. Here is gold, by the way, moving a little higher again, but it has been consolidating, not doing anything at all for a few days. And you're better off, by the way, buying a gold miner, be it Barrick Gold. My pick is Newmount. These stocks continue to move higher, even though the underlying commodity, gold, continues to stay flat, not moving at all. So we're sticking with the miners. But look at this negative momentum, by the way, in the RSI and the MACD indicators. Even with this negative momentum, the chart is not dropping. It is holding ground. What does that mean? When the tide turns and we see positive momentum in the RSI and MACD indicators, gold will blast higher and the miners will gain even more. What about oil? Brent is what we're seeing right now from a 4 hours perspective. A reverse head and shoulder formation. We will see oil moving higher above 118 once again. That remains to be seen, because you could look at it as a bear flag pattern in the grand scheme of things. So you could have a reverse head and shoulder formation within a larger bear flag pattern. So long as 105.84 is intact as support, Brent could move higher. But if the bear flag plays out before the reverse head and shoulder formation and 105.84 is lost, then we're going down, perhaps breaching 100. Moving on, the 10-year yield, a little soft today. It is working those overextended conditions in the RSI and MACD indicators, and it went down to 2.34. Breaking that level could produce a flush down, perhaps all the way to 2.2%. If that is the case, it will be good news for the TLT. Here is a weekly chart for the TLT. It moved higher again today. Look at the RSI, the MACD indicators. This chart is severely oversold. It deserves a bounce, at least all the way to 134.5. I'm playing the bounce, and I'm sticking with the bounce until we get to 134.5, or I see a reversal in the 10 years yield chart. What about the VIX 4 hours chart? A massive meltdown. The question is it a trap? I believe it's going to be a trap in the long run, because we have earnings and we will have negative surprises in earnings. And then everybody will scramble to try to hedge and buy puts. And this will push the VIX higher. But for now, the most important number is 20. Will the VIX close the week above 20 or below 20? It is getting oversold, no doubt about it. But we have this complacency. You can hear it in the comments in this channel, and perhaps others, with commentators saying, hey, the stock market will go back to all-time highs. You don't get it, man. So there is no need to buy the VIX. There is no need to buy any hedges or anything like that, because the stock market is going back to all-time highs. This is the sentiment right now. It went from bearish to hyper bullish again. And this comes with a lot of risk, specifically being underexposed to hedges as we head to the earnings season. Here's the VXN 4 hours chart. Look at the MACD indicator. Look at the momentum. It is bottoming. It's gonna pop. The question is when. But most importantly, we have 2 days left now. Will Friday's closing be above 27.5 or below 27.5? That is an important psychological battle between the bulls and the bears. The bulls want to crush the VIX, close it below 20, which is the equivalent of 27.5 in the VXN. The bears want to do the opposite. But where is the hedging? Nobody wants to buy puts all of a sudden, and hence, these volatility indices are stalling, but they're gonna pop, mark my words. And here's Apple, a daily chart. Nothing happened today. It is just stalling. It did not lose 1.72.4. It did not even close the gap, so nothing happened at all. The momentum is peaking, meaning that Apple is running out of gas. I mean, we're talking about 11 days in a row. It's going to run out of gas. The question is it going to be a stall for now, a pause, or will it be a pullback, a big one? And how big will it be? Let's say the chart loses 172.4. Is that a big deal? Not at all. Still bullish, no problems. Let's say it loses the upper edge of the channel in yellow. Is that a big deal? Which is going to be around 170, by the way. Not really. But if we go beyond that, then we got a problem. And here is Tesla, the souffle in hourly chart. Any update? Not at all. Still hugging 1,090.5. And as I said yesterday, it becomes a battle of psychology. The recent buyers are not selling. They say, hey, I'm sitting on profits. Why would I sell? I'm only going to sell if it goes down. The buyers waiting in the sidelines, they say, it went a little too high. I want it to go down. So the chart stalls. Nobody wants to do anything right now. But there is a third player, by the way, in this equation, which is the market maker. Remember the gamma squeeze that initiated this rally? Well, the gamma squeeze, in essence, is the market maker buying shares of Tesla. If the market maker decides to dump, it will initiate the selling, and then comes the profit takers, and that snowballs perhaps all the way to closing the gap and maybe losing 995 for support. And then, will the buyers waiting on the sidelines show up, buy the dip, and move the chart higher again? This is what I'm waiting for. What about BTC, tulips, Bitcoin? Nothing is happening here. It is stalling too. No update at all. And it becomes a battle of psychology. There are folks who bought at 42,000, for example. Now they're waiting for other people to buy. If these buyers don't show up, the sellers, the profit takers will, and the chart will go down, and they might breach 42,000, and that triggers more selling as people want to book their profits, whatever left of the profits, before they go negative. But if the buyers show up right now, new blood, let's say, the chart could move higher. But for now, we're stalling, not just in BTC, in many other charts. A massive rally in a short amount of time, but it ran out of gas. What about AMC? This is a 2 hours chart. It moved all the way down to my target at around 26, so I took half of my puts out, and I'm letting half ride. Because there is a possibility that AMC could move higher again if we see more call options buying. But if that doesn't happen, and we get closer to Friday, and those call options start to lose a lot of value, and we see a lot of booking of these profits, or maybe losses, the chart will go down all the way to 21 and erase this massive pop altogether. But you can look at it, by the way, as perhaps an ABC pattern. We saw the A leg, now we got the B to 26, and the C could take us higher. But that depends whether the apes are going to buy calls, but specifically shares, because you can initiate the gamma squeeze and push the stock higher impulsively in a short amount of time. But the market maker will catch up to you, and then the gamma squeeze doesn't work anymore. So you're going to have somebody doing the buying of the shares. And that has to be the apes. Lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? An important day. We have initial jobless claims for the week. We also have consumer spending, personal income, but most importantly, the Fed's favorite PCE price index, core inflation, which is a cooked number, by the way, but the Fed likes it because it is cooked. And then we have disposable income, real consumer spending, and another important indicator, the Chicago PMI. And with that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.